Hey guys, this is Jack. I want to do a quick video talking about what I've been doing with option trading. A lot of people have asked me about it. I've been successful so far. It's not rocket science by any means, but it took some research to put this together. And other people are more profitable than me, but I'm seem to be more consistent. What I've realized is that it's very easy to make money in the market. What's difficult is to keep the money in the market. And so my system is kind of designed to avoid losing money while still creating consistent returns. And that's what you want when you put large amounts of money into something. You'd rather, minimize your losses and take smaller returns versus going for the big gains. So that being said, I am selling Iron Condors. And I've talked to some of you about this, but brief synopsis of this: an Iron Condor, let's say the price of the equity, it could be a stock or it could be ETF. I typically do ETFs, but I have done Tesla and Intel. But let's just say the price of this ETF is $100. So I will sell a call option at maybe 120 and then buy one at maybe 125. And then I'd sell a put option at 80 and buy one at maybe 75. And that difference between the 20 and the 120 and the 125 call option and the difference between the put option of 80 and 75, that's called the spread. And in this example, it's $500. 5 points is $500. Each point is $100 if you're doing one contract. So in this example, I'm risking $500. My date to expiration will typically be 30 days. I've experimented with weeklies. I've experimented with long term. I've got one on Intel, I think, out till January. Very profitable, but out till January. So this is just a basic example of monthly option selling. So I always go one standard deviation, 84% chance of success. A lot of people will go much, much lower chance of success and higher returns. But again, I've found that, I want the more consistent returns, the safer returns. So I'll do one standard deviation, which basically means an 84% chance of success. And I'll show you on the computer what that is. But once my order gets filled, I then put a working order in to take profits at 50% of that. So in this example, if, let's see, I trade the VIX with a $500 risk, at this right now, I can make $70. Okay, $70 is 14%. Now, $70 doesn't necessarily sound like a lot. What's $70 a month? Okay, but the bigger picture here is look at the percentage. It's 14%. Now, this is one contract. If I want to do 10 contracts, I could. 10 contracts is only $5,000, and for that, you're making $700. Now, it can add up very quickly. But what I do, that's 14%. But what I do is I put a working order in to take profit at 50% of that. All right. So what that means is I won't make the $70. I'll make $35 on that, which I know a lot of people will scoff at that. Why are you throwing away all that money? Well, it's a much higher chance of success, and that's what I'm looking for. I'm looking for safe, consistent returns. I'm not looking for pie in the sky or anything like that. So I'll sell an Iron Condor. After it gets filled, I'll put a working order in at 50% profit. Now, having said that, let's go back to the example. Let's say the stock price is at $100. So I sold a call at 120 and I sold a put at 80. And it doesn't always work out that way, but let's just say it's 20 points each way. So what I'll also do, and again, I put a 50% profit in there. So when it hits 50% profit, I'm out of the trade. What I'll also do is I'll put alerts in there. So in this example, we're talking about, I think we're actually talking about the VIX in that example. So if that was the VIX, or if it was a SPY, whatever it was, I would actually put an alert in there to alert me when the stock price started to creep up above 110 or below 90. That lets me kind of be aware, hey, the stock price is creeping in on one of your legs, so I can, make adjustments as I need to. And I can either roll one side of the Iron Condor, which I know a lot of you don't understand that right now, but it's something you can look up, you can look into and learn it. This isn't supposed to be a options training video. This is just explaining what I'm doing. So I'll have the 50% take profit, which is an add failsafe. So usually I'm out of the trade in 15 days or so, 10 to 15 days. And it's a much higher chance of success. Usually on a 1 standard deviation or a 84% chance of success trade, you'll earn, like I said, the 14%. But when I up the chances by taking a 50% profit, yeah, I'll only make half that. I'll only make 7%, but I'm out in 15 days. And it's usually a 94 to 98% chance of success when I do that. So that's definitely what I'm looking for. Okay? So that's the basis of my system, and we're going to get into some trades right now.